All right, let's give it a moment before we begin. Hey, hello there, Jeffrey. So yeah, we are waiting for the others to join first. Let's give it a minute or so. Hey, good day to you. Good day to you too. Yeah, by the way, Happy New Year. Happy New Year to everyone. All right. Okay, a bit more. Just wait, bear with me, wait a bit more for the others so they do not miss out on this webinar. Hey, best wishes as well. Thank you, Jeffrey. All right, let's not wait anymore. Let us begin. Okay, so before we begin, today I'll be talking about the Trading Strategy Masterclass 1 out of 3. It will be on scalping. So just a very, very quick disclaimer before I begin. The information provided in this presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage. And they must be solely used for educational purposes, and they do not constitute investments advice or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided. So, attendees should also note that these sessions are audio recorded and may be published in various media, including print, audio, and video formats without further notice. Okay, let's give you a moment. I do apologize. I think I need to do something first. Okay. Hey, hi there. Are you Chung? Let me begin this. Give me a moment. 2023. Hey, give me a moment. I'm having some technical issues. Hey, hi there, Chung. I'm having some technical issues. Give me a moment, like a minute. Okay, it's 3rd of Tuesday. Trading strategy. Give me a moment, Trong and Jeffrey. I'm trying to fix this issue that I'm having on my screen at the moment. So I have two screens on my left and on my right. Okay, get this sorted out. Okay, let me begin this. Yes, Chuang, I'll respond to you in a bit. I'm still trying to fix the issue that I'm having. Okay, are we going live? All right. It's still loading. I have an issue on my right side. Okay, nice. Everything is up and running. Okay. So Chung actually asked, it has been so long, you haven't heard from me. Will I be more involved in trading in different ways this new year? Well, it's been long because I've not been trading for the past 3 weeks. I think the past 3 weeks, the market has gone into some kind of consolidation, especially euro dollar, which is my favorite currency pair. It's not moving much. So I'll be likely starting to continue to trade next week. So I'll see how it goes. So that's the reason why I haven't been posting much on my TradingView account. So let me open the participants. Hey, hi there, Doris. Nice to see you. So how about, so you're asking me, will I be involved in trading in different ways this new year? So definitely not. I'll be still sticking to my old ways of trading, the same method that I've always been using, the ICT concepts method. Okay, so it's I just type it out. So of course I see a few new faces. ICT concepts. This will be my main trading method. So, okay, let us begin. Okay, I am actually from Everest Fortune Group. Everest Fortune Group. So I'm actually the prop trader for Everest Fortune Group, and my name is Chen Yongjing. And we have our chief trader, Desmond Leong, and our prop trader and fundamentalist, Jin Dao. So you might see him around. Okay, so today we will be going through on what is scalping. So what kind of trading strategies do you guys use? Doris, Jeffrey, and Shang, do you guys swing or do you guys scalp? And what kind of time frames are you on when you are trading? Just let me know in chat so I can get a rough gauge of what you guys' experiences are, so I can speak on a topic that is more suited for you guys. So you also find Forex quite not much change of structure, but gold has been the most volatile. Yes, definitely. Gold has always been the most volatile pair. Oh, Doris, you are a newbie. Okay, just there's no wrong or right. So how long have you been trading, and what kind of trading strategy do you use? Oh, Trang, you said you definitely swing or at least intraday. All right. So when you are swinging, what kind of time frames are you in? So yeah, scalping can be very fast-paced, exciting, mind-rattling. You can see on the chart. And it's a short period. You close it out typically within the same day, within 1 to 2 hours. There are even better scalpers out there who actually trade. They close out within a few minutes, 5 minutes, 10 minutes, and they close their trade, making quite a nice profit before leaving the markets for the day. So Jeffrey, you said you are more of a day trader. You trade breakouts. Well, same thing. My trading strategy is pretty similar to you. I also like to trade breakouts or trade back into the range. So yeah, what kind of trading strategy is that? Do you do support resistances? So there's actually the fastest trade I have ever seen in my life, in real life, sitting beside me, called Jin Dao. This guy right here, Jin, he sits beside me on a daily basis when I'm in the office. The fastest I have ever seen him open and close a trade. It was roughly 17 seconds or less. It was very fast. So he's a very good scalper. So Trung, you actually said with your failures in the past, you're definitely at least on the H1 and H4. You find scalping very tough for you to navigate wins. Well, definitely on the H1 and H4, things are moving. It looks pretty slow. So you actually have more time to plan out your trade. You can sit down, slowly plan out H1, H4 trades. It might take a while to actually hit your entry, but at least it helps with your psychology because it doesn't move that fast. So a lot of, that's amazing to hear. 70 seconds, that means moving in only momentum, like in big news like NFP, core CBI. No, definitely not. So if you are talking about that kind of news, my fastest trade for my personal record was 2 seconds. That was during the NFP. 2 seconds, my trade just full up, hit, take profit, and close. That was a very fast one. but his 17 seconds was on a day-to-day basis trade. He did not go for any news events, so that was already considered pretty fast. So we are trading between the opening and closing of a trade, a very, very quick one. So for me, most of my trades, personally, I'm just being very open and honest with you guys. Normally, it runs for 1 to 2 hours before I hit my take profit target. So how I know when my trade is going wrong? For my personal trading strategy, I use ICT concept. So normally if it goes one direction, it should technically continue moving that way. But after 1 hour, and I'm still frolicking around the chart, it's just moving in a range. It's very, very disgusting range. It's not moving much, or my trade is still in a loss after 1 hour. I will start to manage my trade and close it out early instead of letting my entire trade hit the stop loss. I never ever allow my trade to hit stop loss. So we grab a very small amount of pips. For Jin, for example, he trades roughly per trade, he grabs about 5 pips, 3 to 5 pips, or maybe 5 to 10 pips, and he closes out his trade. So also, he risks a very small amount of pips. And we are taking advantage of the market volatility. For me, I am scalping on the 1 minute time frame. I have actually 2 charts open. Normally, I'm 15-minute charts on one side, and my main chart that I'm looking at, it's on the 1 minute. So for the others, Jeffrey, Doris, and Maria, what kind of time frames are you guys on a day-to-day basis? Do you guys have a fixed trading time like the London session or the New York session? Because for me, I only trade during the London and the New York session. Any possible trade entries that are outside of this timing, I do not touch at all. I do not look at the chart at all. I do not care what happens on the chart at all until the London session arrives or the New York session. Oh, nice. You actually trade the London session. So which country are you from? So I know Trung is from Vietnam. So how about the rest of you guys? Doris, Jeffrey, and Maria. Where are you guys from? For me, I am from Singapore. So I'm right smack in Asia. Oh, nice. You're from Belgium. Okay, where is it at? Belgium. Okay, Jeffrey, you use 15 minutes, 30 minutes, 1 hour. And for entries and exits, you use 1 minute and 5 minutes. Oh, you're from the Netherlands. Nice, nice. Okay, I think your trading strategy is very, very similar to mine. So I can see that you are using top-down analysis. Am I right? Top-down analysis, do you look through the entire day from top to bottom, and then you wait for price to hit your point of interest before you enter on the 1 minute and 5 minutes? Am I right to say that? Okay, just a few agendas for today. We are going through what is scalping. I already went through that. How much time do you need to scalp? How much leverage do you need to scalp? How much capital do you need to scalp? And I can show you guys 3 powerful scalping strategies. All right, it's nice. You use alerts to anticipate on the level. So I assume you are using the trading view alerts. Trading view alerts, you are clicking on it. Oh, nice. You're from Poland. Nice, nice. Okay. So use alerts to anticipate on levels. So same thing right here. I do not stare at the chart all the time. I set an alert and I leave the chart, go somewhere else. When the alert hits, then I walk back to my chart. So why scalp? We are able to avoid the known unknowns. What are the known and unknowns? Known, it's the news event. When we go to Forex Factory, we already know what time the news is coming. We already anticipate. We can look at it. Everyone can say when the news is coming. You can sit down, go Forex Factory. News coming in 1 hour, in 30 minutes. Everybody knows that. But what is the unknowns? Unknowns is the result of the news. we do not know the result of the news. So if we are not an experienced trader and we enter a trade, let's say we buy 1 hour before the news and the news turns out bad and the trade reverses quickly in your favor and hits your stop loss. So when you're scalping, normally you ignore the news. So if a news is coming out 1 hour to 2 hours before, you just stop trading. And after the news event happened, you stop trading for the next 1 hour after the news and let things, settle down and die down before you continue your trade. So you have quite a lot of control. You can control how much you want to trade, 20 pips to 200 pips. For swingers, they go for 400 pips, 500 pips. And there are definitely new opportunities every single time you open a chart. Because if you're on the 1 minute time frame, there's so many setups happening. So Trung, you actually asked for a quick side question. Can you set up alerts in MetaTrader 5 beside trading view? So I think you can actually look up for the, those EAs that can set up alerts. Let me just find it for you real quick. MetaTrader 5 set alert indicator. You can find an indicator for that. Just find a quick one for you. So I'll just send it to chat. You can take a look at it. Okay, next, let us continue. Hey, no problem, man. Glad to help you. Okay, let us move on. How much time do you need to scalp? So it's from a few seconds, just like I mentioned, few seconds, like the NFP, sometimes it's 2 seconds, 1 second, immediately hit your take profit target very, very fast, or to a few hours. So some people actually trade for 1 hour in the morning. This is not definitive. This is just a suggestion. For me, I only trade in the afternoon and at night. So normally per day, I'm looking at the chart for, let me count how many hours am I looking at. 3 p.m., 3, 4, 5, 6. So I'm looking at the chart roughly 5 to 6 hours a day personally, Monday to Friday. So important to have proper risk management. Proper risk management, you should only risk 1% or less on your account per trade. Because if you're a very, very bad trader, you're extremely bad, you're still learning how to trade, risking 1%, you need 100 trades to blow and destroy your account back to $0. 100 trades. So what do I mean by 1%? Just a quick recap, $1,000 account. You should only risk 1%, which is $10 per trade. So if you actually blow your $1,000 account on 100 trades, you have to go back and reflect and relearn everything, unlearn and relearn everything before you continue trading. Because it's very, very bad if you can lose 100 trades at once. Yeah, and you do not have to monitor trades all the way well. I personally don't really agree with that because for my personal trading strategy, I'm scalping. I'm monitoring my trade all the time because I'm on a 1 minute chart. It's very, very different. So some people will say they are scalping. To them, they are scalping on 15-minute chart. They don't really have to monitor so much. Okay. How much leverage do you need to scalp? So on a high leverage, 1 to 100 onwards, low spread pairs such as the Euro dollar. That's the reason why I trade Euro dollar a lot, because it's low spread, and even the Aussie dollar. So if you guys want to scalp, you guys can actually use these currency pairs. For those who want to scalp and risk quite a bit more, or you guys want the volatility, you can try Go. So Go is actually XAU USD. So what kind of currency pairs do you trade, Trung? So I've seen you since last year. Really appreciate the support so far, Trung. So Doris, Jeffrey, Maria, Trung, what kind of currency pairs do you guys trade? Do let me know, and why. Why are you trading those currency pairs? For everyone has a reason, has their own personal reason. So I actually used to trade GBP, JPY, GJ. I only traded that because last time I was watching this YouTuber called Raja Banks. So he only traded GJ. Doris, same. I used to trade GJ in the past. Only GJ. So is there a reason why you are only trading GJ? Oh, Maria, you traded gold, euro-dollar, and the Nasdaq. Wow. That's quite a lot of pairs, man. Why do you choose the Nasdaq? I know for gold, definitely you are looking for the volatility. Euro-dollar for the low spread. Okay. I only focus on one pair, by the way. I only trade euro-dollar. Because I like to put my focus on one currency pair, full on focus. I know what's going on the daily, 4 hours, 1 hour, everything is at the top of my head. Even on the 1 minute chart, 15 minutes chart, everything is in tune in my head. I do not have to be confused over a few pairs. That's the reason why I only choose one single currency pair. So Jeffrey, you trade euro, dollar, gold, GU, low spreads, and volatile most of the time. Well, I should actually check out GU. I actually did try to trade gold before in the past. It's way too fast for me personally. I prefer EU. So gold is very, very fast. I used to trade gold for a few months last time. So Trung, you traded GU, but you currently don't. You'll soon try to trade EU. Currently holding losses in gold, but gold is harder. So I low down risk management. So well, gold, when it goes in one direction, it usually shoots up like mad, like a rocket. One direction, if you got no stop loss, your account can get wiped out very, very fast. But you can also make money very, very fast. Goes both ways. So what do you mean by you lower down your risk management? Do you lower the amount that you are risking per trade? So if you don't mind, just send in your chart. You can screenshot your trading view chart. If you guys are in any trade, you can do this. So I'll just clear out my chart. So you can actually press the camera button on the top right-hand corner, take a snapshot, copy link to the chart image, you click on it, and you can paste it in the chat. And we can all learn together, all learn from the trade. Doesn't matter if you are in a loss. Because end of the day, we are all here to learn and improve. For the long run, you want to be profitable. There's no harm being embarrassed. There's nothing wrong to be embarrassed about a losing trade at all. It's better to fix it up, put down our ego, learn everything. So in the future, we can look back and thank ourselves for being willing to, be embarrassed. So I wouldn't call it embarrassing at all. We are all learning. Okay. Hey, hi there. Dr. Wagumu Elias JB. So you say Happy New Year. You missed the beginning of this session. Oh yeah, glad to see you also. So you trade London and New York mostly, and you are from Uganda. Nice. Same as me. You only trade euro-dollar due to the low spreads. So this webinar currently is being hosted on both YouTube and Zoom. So I might have just missed your message on the YouTube side. So I'm reading the comments from there. So Trung, you also said you lower down the trades in, let me type hi to him. Hi. There. Okay, so you lower down the trades in gold from last week, but you're still holding it, like especially this morning's movement in Asia, in London, and the New York session. So yeah, just feel free to send it in. Trung, feel free to send in your chart so we can learn together. Okay, next, what are we on? Okay, next, how much capital do we need to scalp? So a lot of brokers. Hi there, Dr. Waguma. Let me reply to this guy on YouTube first. Okay. So how much capital do you need to start? Many brokers like to tell you guys or attract you guys to tell you guys that a beginner can start trading with $50 or even $100. But $50, 1%, you are risking 50 cents, 0.01 lot, that's 5 pips. What are you risking? You can't do much with $50. $100, risking $1. So $1, 10 pips is $1 is equals to 10 pips. So a good amount to start $250, but my personal view on this is just my personal opinion. I would prefer you guys to start with at least $1,000. $1,000 to start trading. So 1% on $1,000, it's $10. So 0.01 lot, that will be 100 pips. So it gives you a lot of leeway, you know, to trade and manage your trade to close back to break even or close out in a minor loss. So I prefer you guys $1,000 account. So same thing, you can do it with $250. You can do the same on 2.5K accounts and even a 25K account. Don't ever rush into scaling your accounts. Do not do those kind of nonsense Forex challenges on YouTube challenging you guys to do $100 to $1,000. So I'll just type it out. Nonsense challenge. What kind of challenge is this? 100 to 1,000. That is a 1,000% increase in your account. If you are able to do this challenge consistently every month, I'm sure many banks, especially hedge funds, would be begging you to join them, because a hedge fund cannot even generate 1,000% a year. So this challenge is very nonsense. A realistic target that you should be looking at is maybe aim for consistent 3 to 4% per month. So that is 1% per week. So on $1,000 account, you should be aiming up to $30 to $40 profit a month. If you can do this consistently, why not you move on to a Forex prop trading challenge? $25,000 account, move on to a $100,000 account. On a $100,000 account, 4%, it's $4,000. That's the reason why you do not rush into scaling up your account. Always focus on your consistency before you continue trading. Another, just a quick one also, on a $1 million account, 4%, it's $40,000. So that's why these small percentages mean a lot on a larger account. So if you are using a $10,000 account and you want to make $2,000, you are just rushing to make that money so you can, you know, make a living off it. But $2,000 is actually 20% on the 10K account. That is also very unrealistic to do every single month. Okay, next. Okay, 3 powerful scalping strategies. We have the horizontal pullback strategy, the Fibonacci retracement strategy, and the Nike tick strategy. Okay, since you guys are beginners, I will most likely be only going through these 2 strategy, because the Nike tick strategy can be confusing for beginner traders. Okay, the first one is the horizontal pullback strategy. Okay, wait, before I continue, let us take a quick look at Trung's chart. So you're saying you meant this Asia morning movement moves big like London to New York session. Let me open your chart. So we are opening Trung's chart. Hey Trung, so where did you actually buy or sell your trade? Your entry, do let me know. Send it into the chat. So I see that you are trying to implement some sort of supply and demand on your chart. Am I right? Let me zoom in. Some sort of supply and demand. Okay, so you actually, where do you buy? Can you send in your number, the number that you actually bought or sold at? Okay. Okay, while Chung is typing, while Chung is at, okay, you put a sell at 1825 to aim for TP around 1800. Okay, I can see why you put 1825. I'll just open up the trading view. Okay, let me go to the Go chart so we can all learn together. There's no wrong or right. Everyone see the charts differently. So let's take a look at Go. So I'm trying to find out why you entered that trade there. I'm not saying it's wrong. Okay, so you try to enter roughly, am I right to say you entered roughly 125 here? Somewhere here, you try to sell somewhere there. Did you put a stop loss? That's a very, very important thing. A stop loss is very, very important. So you're trying to take profit at 1800. You're aiming for an area roughly right here. Take profit. Target. Let me change it to green. Please always set a stop loss, because if you don't set a stop loss, price can just continue moving upwards, and you can potentially blow your account. And some more overall in the larger time frame, on the 4 hours, 1 hour, we are on a very, very massive uptrend to the upside. So please take care of this current trade. Let me find out why do you enter. Do you enter because you felt that this area was some sort of resistance? So you're trying to reflect off that area and potentially trade to the downside. Am I right to say that? Some sort of resistance there. So you're trying to head up, sell, and head back down. Is that the reason for that sell entry? So you put 4 small trades, you already close half of them, with the rest nearly reaching 1850. So you actually entered sell there. You close it up right up there, but how could we have better managed this trade without closing so early? So you close roughly at 1850. So you actually close out some of the sell entries here. Okay. So how could we have better managed this trade? So if you look at the PowerPoint slide that I was about to present, isn't this the same? Looks very, very similar to your chart. You were trying to sell. You're trying to sell gold right here, trying to reflect it back down. There was some sort of resistance. What you can do is you can actually wait for price to come back down to your resistance area before you close out at break even or a small loss before price continues bullish. So look at your chart, it looks the same. Price could actually, let's go at this resistance, 1 tap, 2 tap, 3 taps resistance, price could actually come back down, break even before it continue moving bullish. That could be a possible way for you to manage your trade better in the future. Okay. Next, the horizontal pullback strategy already just mentioned, especially with Trunks live trade. So same thing, horizontal pullback strategy, there was some sort of support. Price broke through. If you are looking for a buy, you actually try to buy somewhere here. You can wait for price to retrace back up and you close out your trade before price continues bearish. So you would actually have lost a bit of your account, this and small little area right here, instead of letting it hold all the way down. So now we are combining the horizontal pullback plus the Ichimoku Cloud. What can we do with this? So with price, how do we read the Ichimoku Cloud? If price is above this Ichimoku Cloud, this whole thing is a cloud, it's a bullish market. So if price is currently underneath this entire Ichimoku Cloud, this indicates a bearish market. So Ichimoku Cloud, let me type in the chat. This is a free indicator on TradingView that you guys can try out. Okay, you said thanks for the tip. Maybe after all your lecture in scalping, I look for your take in H4 support channel. I think it's the near 1,800 level. Let me open back up the trading view. So yeah, you can potentially look for a buy. Let me just clear out this area. You can potentially start to look for a buy, maybe a retracement, preferably the 61.8% area. So I'll just use a Fibonacci line, drawing from the bottom of this significant swing low. So I'll just draw it out, bottom to the top, and I'll label it out. At least the 61.8% area. So if I'm looking at the 1 hour, at least I'm looking for price to come back down all the way to this area and potentially push up to the upside. That could be a possible buy entry. So the area, it's the 1817 area. So this could be a potential buy entry. So I'll just screenshot this down and then I will just send it to the chat. So why am I always talking about the 61.8% area? The 61.8% area is the golden Fibonacci area. So if I draw from the bottom of this swing low to the top, you actually notice that price tapped very, very nicely into the 61.8% area, went up, tapped before it continued bullish. The next area, I'll just show you guys, it also went up from bottom to top. It also tapped into the 61.8% Fibonacci area, 61.8%, and it continued bullish. So that's the reason why I'm saying you could possibly look for price to hit back down here before you enter a buy. So does this all make sense to you guys so far? If you guys have any questions or if I'm explaining too fast, just let me know in the chat. And also, Chung, thanks for the reminder. I likely will start posting again on TradingView either today or tomorrow, likely tonight. So this is my TradingView profile. I'll just send it to the chat right there. Feel free to follow me. I'll start posting again. Start posting more. The last I posted was on the 13th of December. That is almost 1 month ago. So if you guys are new to TradingView, also please use my referral link. Feel free to use the referral link and register for a TradingView account. So right now I'm actually using a pro account on TradingView. I only use that because I like how I can use 2 charts at once. On the 15-minute chart, I can use 5 minutes and 1 minute chart at the same time. Okay. Let me just send it to chat. Just delete this. Okay, copy link. Copy link to chart image. I'll just send it to you guys. All right. Let us continue to the powerful scalping strategies. So back to what I was talking about. I was talking about the Ichimoku Cloud. As long as price is below the Ichimoku Cloud, the market is bearish. So we are adding confluence to our sell. We want to look for a sell, but why? There must be a reason why we are looking for a sell. So in this specific case, in this specific scenario, we are talking about the Ichimoku Cloud. We have the horizontal pullback. Same thing, you draw one line across. 1 tap, 2 taps, 3 taps. You can look for price to hit back up. And you look for sell back down, which is in line. Take a look, price went up. It should actually tap into the area. I'm not sure why the animation isn't playing well. So there's it's supposed to be an animation playing. Price is supposed to tap into this area right here and reflect back down. So please screenshot this down before we continue. It's a combination of horizontal pullback and the Ichimoku Cloud. Okay. Next, let us continue. So next, what do we have? We have the Fibonacci retracement strategy. Well, just now I did show you guys the Fibonacci retracement strategy. So you guys cannot actually, this is a bad way to draw a Fibonacci point. All these are not significant at all. You cannot draw a Fibonacci point from some random area, like right here to here. It's not significant enough. Just now I already show you guys on the trading view chart how significant it must be. It has to be from a significant area, significant area, significant area to draw your fibs. So if you are drawing from the bottom or from the top to the bottom, this is a significant swing high. Wait, let me just get it out. Okay, got it. You're drawing from the significant swing to the next significant low. That's how you draw a Fibonacci line. You cannot draw it this way. You cannot draw from some random small little area right here to the top. This is not a significant area at all. You're supposed to draw from the bottom all the way to the top. So I'll just pull it down. That's how you should be drawing your retracement line. Okay, let us continue back to the chart. Okay, swing lows need to be significant. Please watch this animation first. So any questions, just let me know in the chat. Okay, next. Okay, please watch this animation again. When you draw a Fibonacci line, if it cuts through the fib or it's too far apart, it's not a valid Fibonacci line. Let me show you guys on the chart. Let me find something that it's not valid. Okay, let's say you want to draw a Fibonacci line from the bottom here, all the way you're saying is until here. But if you actually show the trend line, price has actually deviated quite far away from the Fibonacci line, even coming back down already very, very far away. So this is not valid at all. Not valid. So it's supposed to be like that. So this is still pretty close to each other. So this is a valid trend line. It's pretty much close to each other. Valid trend line. Let me just delete this out. And we have another valid trend line. Price is very, very close towards the Fibonacci line. Okay, next we can move on. Okay, Fibonacci retracement. Okay, Fibonacci retracement plus pullback. I always mention about the 61.8% area. So you actually have a pullback method. You actually draw a line, 1 tap, 2 taps, 3 taps area. You are looking for price to head back up. But we want to add confluence to our trade. So if you draw a Fibonacci line, from the top, this significant swing high to the next significant swing low, we notice that price is in line with the 61.8% Fibonacci line. So we are just adding confluence to our trade, to having a better confirmation to our trading idea. Okay, take a look. Price actually went back up. So we draw from the top again. So we can draw one more to the bottom. 50% area also coincides with the 61.8% golden Fibonacci area. And it also coincides with the pullback line. So you can actually take a sell, look for a sell entry right there. Look for sell, and price just rejects to the downside. So that's a possible scalping strategy that you can take a look at. Fibonacci plus pullback method. This is one of my favorite beginner trading strategy. So yeah, any questions so far? Please screenshot this down also. Any questions so far? Feel free to let me know in the chat. Okay, let me check. Destinations. Okay, let us move on. Okay, so for you guys on YouTube, I see a few of you guys are watching. Watching on YouTube, any questions, just let me know in the YouTube chats. Because currently this webinar is being hosted on Zoom. So if I'm going too fast, so Dr. Wagimu Elias JB, any questions, let me know. Okay, next we have the Fibonacci retracement plus the pullback plus the Ichimoku Cloud for a triple confirmation, a triple, confluence to the trading idea. So not only do we have a descending trend line, we are looking for price to potentially tap where this trend line, potentially tap into that trend line and reverse to the downside. That is a possible trading idea that we are looking at. So what happens next? Price is under the Ichimoku Cloud also, and you draw from the significance high to the next low. Price is in line with the 38.2% Fibonacci line. So price taps in very nicely, almost taps into our descending trend line, and it reverses to the downside. So if we add a stochastic indicator, there's also a line right there. So we are just adding confluence to this. So this Nike tick strategy, I'll just put it back first. I'll just not present it because I see most of you guys are beginner traders and it might confuse you guys. Okay, moving back to the charts. Any questions so far? Or any currency pairs that you would like me to take a look at, and any scalping strategy? Any scalping strategy that you guys are using, feel free to let me know. Okay. Just send in any charts, any currency pairs you want me to analyze, since we have some time left. If you guys are not going to say any currencies, I'll just start with likely the euro dollar. Okay, take a look at the euro dollar. I like to start by looking at, okay, GJ. Doris, you asked for GJ. That's a nice pair to look at. GBP, JPY. Okay, I'll start off with the daily chart. Price has actually just cleared the previous daily low. Previous daily low has been cleared, and right now price is aiming for some kind of random area we cannot see at all on the daily charts. So let us move to the 4-hour charts and take a look that price is possibly aiming for, okay, there's no area also. Price just cleared some kind of liquidity hotspot right there. Liquidity is relative equal lows. So I call it the sell side liquidity. Sell side liquidity. Why is it there? Relative equal lows. So price has just tapped into that area. So maybe I move on to the 1-hour chart first just to find out what is going on the left side. So price just cleared that area and it might possibly head for the imbalance. So imbalance is in the chart. For those who are new, is usually areas like this right here. Areas like this. So I'll show you how does an imbalance work. So if I actually draw a line right here, fair value gap. Take a look. This market gap right here, price actually went up, went back, tapped into that market imbalance and continued pushing to the upside. So in this specific case right here on the 1-hour chart, we actually have a market imbalance there that price might continue heading down to fill that area. So fair value gap extended. We move all the way. Take a look. Price, although it cleared the sell side liquidity, the relative equal lows, and it also cleared out the previous daily high, daily low, I mean. We can expect price to possibly continue bearish to the downside. Continue bearish to clear out the 1 hour fair value gap. It's the H1 fair value gap or market imbalance area. Okay. So maybe I can move on to the 30 minutes or the 15 minutes chart. I'll just take a look. There's nothing right here. We can possibly look for a retracement entry. So this was a significant swing high, then swing low. Let me check where did it retrace to. 38.2%. Did it retrace back up there? No. Okay, maybe we can look for a possible pullback entry right here on the 15-minute chart. This gap right here. Fair value gap. This is a 15 minutes fair value gap. We can potentially look for a short. Potentially short right here, you know, stop loss above this previous swing high. This previous minor high right there. Possibly setting it right there. Or if you want to play it safe, all the way to the top. To this significant swing high, and you aim for your take profit to be below the fair value gap or all the way down. So right now, if I'm drawing it like that solely on the 15-minute chart, it has a very, very bad risk to reward ratio. What I like to do is like Jeffrey. Jeffrey likes to set an alert. So like me also, I'll set an alert. Add alert for GJ at 155.847. And then once the alerts gets hit, right there, I'll start moving on to the 5 minutes and the 1 minute chart. Mostly on the 1 minute chart, what I want to see happen. So just imagine this scenario already tapped in. What I'll be looking for is for price to go up. And it form a market structure shift before I look for an entry. Oh my God, it just got deleted again. Went up. Market structure shift, retrace, sell all the way down to my take profit area. So this is how I would enter a short position. Take a short somewhere on the retracements all the way down. And this way, it minimizes my stop loss. I'll not be setting my stop loss so high already, so it would likely look something like that. So 1.296 risk to reward, something like that on the 1 minute chart. So once alert hits, move on to 1 or 5 minutes chart for confirmation entry. Why you want to wait for confirmation? Because if bullish momentum, it's very, very strong. You set a sell here, stop loss all the way to the top. Bullish momentum can cause price to just shoot up, clearing out your stop loss. So always look for confirmations on the smaller time frames. So I'll just screenshot this down and I'll just send it to the chat. So what we are looking for is the market structure shift. So I'll just copy link to a chart image and I'll just send it to the chat. So any questions so far before I end this webinar? Do let me know. Any questions so far? I'll give you guys a minute more to ask the questions. So yeah, how was today's webinar? Any feedback? Is everything complicated or is everything that I've explained easy to understand? Yeah, no problem, Doris. So there's quite a lot of volatility in the market at the moment. Hey, very understandable. Nice, nice. Thank you. So if there's anything you don't understand at all that is difficult, just let me know. I'll try my best to re-explain it in a simpler term and try to improve myself also with my, webinar hosting. I always want the viewers that are watching me to understand everything I've said precisely and clear. Hey, no problem, Maria. Okay, Jeffrey and Doris say it's easy to understand. So yeah, thank you very much for that. Any further questions? So let me take a look. When is the next webinar coming up? So we have the Wednesday, okay, Tuesday, that isn't. I will be back on. Okay, I'll be back next week. So I'll be back next Tuesday. Wait, give me a moment. Yeah, I'll be back next Tuesday on the Trading Strategy Masterclass 2 out of 3 day and swing trading. So yeah, if there are no further questions, I would like to thank you guys for joining me until the end of this session. I'll see you guys next Tuesday. So yeah, thank you, Doris. Thank you, Jeffrey. Thank you, Maria. Thank you, Trung. See you guys again soon and have a happy new year. Happy new year and wish you guys a safe trading. Make sure that you guys are profitable at the end of this year. Continue learning, continue back testing. Back testing is very important. If you do not back test, you do not know if your trading strategy is working out well. So yeah, bye-bye. Bye, Doris. Bye, Maria. Bye, Trung. Bye, Jeffrey. See you. Take care. Take care. Just end it right here.